In today's video, I want to talk about a concept that no one is talking about, and this concept will help you improve your trading drastically. When you apply this concept, you are going to know when market is reversing, when market will continue pushing, and when market is creating a complex impulse leg or expansion leg. And that strategy is called the original structure range, OSR. Now, what is OSR? OSR, to determine it on the chart, is simply a range that market must not take. If market takes that range, then this bullish move becomes what? Invalidated. Then we start looking for bearish move. And if it's get taken on the opposite side of a bearish market, then this move becomes what? Bullish. All right, when that level gets taken on that chart, it becomes what? Bullish. And what are the levels here? These are the levels. The last high that was taken, in this case, if this market here, now let's assume we don't have a push high here. This is the last high. Always monitor the last high on the chart. The low that produced that last high, in this case, you are looking for bullish OSR. The bullish OSR, you are looking for the last low that created the high that was taken. All right. Make sure that you don't have another broken high. Right. It must be the last high that was taken. If this push up, then this will be the last high that was taken. Right. And so on and so forth. So let's assume here that the market hasn't taken out this high, but it came back down. All right. So this high, trace back where it started from. When you trace back that place it started from, this range from year to year is the original structure range. I will tell you why. So, for the market to have a complete reversal, market needs to take out that low. Market needs to take out this low. Once market take out this low, then you should have a higher probability of a bearish move, a switch in market structure. But this is what a lot of people do. A lot of people wait for this chalk. This market takes out this, and this is chalk. And they get justified that the reason why this chalk we hold is because market tapped or mitigated a point of interest, which is good. There's no problem. But mitigating a point of interest and then creating chalk is not enough to change this market structure, this bullish structure. Mitigation and chalk is not enough. Market needs to take out the OSR, which is this level. I know it's strange. You've not seen this before, right? If you want me to use this strategy to show you how to trade a pullback and show you how to trade continuation, this video should have 100 likes. If we have 100 likes, I will make that video. If it doesn't, I will keep it to myself. Let me know in the comment section if this is what you are looking for. Then let that video hit 100 likes, and I will give you all that you need to know when you are trading market structure. Market structure is very complex. Now, because of this mitigation, the truth is, in a bullish market, market has been breaking previous supply zones or other block. Market have been breaking them. So this is not enough to now justify that the market wants to reverse. And again, we have another point of interest above. It could be a fair value gap. It could be other block, breaker block, whatever it is, supply or demand. So on that note, you have to be careful in this case. Remember, trading is a game of probability. This is a low probability for a reversal. This is a higher probability for reversal. And this is not double break of structure. Double break of structure is when price break this level, and then this new low that was created, price broke it. All right. The double break of structure may happen before this. If this does not go, there's nothing the double break of structure will do. Instead, price will continue moving higher. All right, price will continue moving higher. Why? Because double breakup structure do not confirm reversal. What confirm reversal is the original structure range being broken, right? So what happened is that most people trades look for the short in here. They look for a short in here when market comes in here, and they want to sell to the downside. So they want to sell to the downside. In that case, what happened? Market do not respect that level. Instead, market taps into this point of interest, which is high probability point of interest. If you want me to show you how to make all of this video must hit 100 likes, and then we move high, and then taking out this. Same thing applies in the bearish market. Most people call reversal too early. Okay, in this case, price tap into a higher time frame point of interest, and by so doing, it created chalk. And when it creates chalk, most people conclude that market has changed structure. If you look at my recent market structure video, you will notice that all this chalk do not work like this, right? What happened is that market trades in here. This is the original structure leg. I will show you why. So the original structure leg is, you look at the recent lows. In this case, you are looking for a bearish OSR, a bearish original structure range. Sometimes they call it leg. I like using a leg because it ends up creating what? An impulse leg. So this recent low that was taken prior before this, okay, prior before this, you mark the high that produced it. That high and that low is the original structure range. And by the way, the offer I gave for the SMC course, this is one of the things I'm showing them, right? But there are more to this. This is not just it. So market we need to trade in here. This is a high probability area to sell. Why? Because there's an inducement here. There's nothing wrong for price to come in here and then trade. Price can do anything it wants to do. But why is this a high probability? Because that point of interest is at the OSR, the original structure range. Okay? Then you want to take that trade because this high here is an inducement. Market can sweep this and then maybe tap into the whatever it is. It could be order block, could be fair value gap, and then continue the trend to the downside. Now what does that mean? That means that from year to year is simply one impulse leg. That's why sometimes I interchange it by calling it leg of structure. Okay, this is an impulse leg, retracement and pullback and continuation. Right, now you can also use this to trade pullbacks. Most people struggle in trading pullbacks. If you want to know more, let this video hit 100 likes and I will make a video on that. This structure, this OSR, can both be used for a major and minor structure. Now, if you don't understand what a major structure is, this is what it means. For a major structure, it's simply the main push of price, right? Now, before price breaks this high, for example, price will move, creating what? Impulse legs, internal what? Structure. Are you with me? Pardon my diagram. It creates internal structure within this leg of structure. So this internal structure also is structure. It works well because the market is fractal. It works in time, right? So we have a major structure. This is the major high, major low. Then this is minor high, minor low, minor high, minor low, and so on. This is the major high. So we are targeting, if we are bullish, we are targeting the major highs. Are you with me? And if we are bearish, we are targeting the major lows. But this OSR can both be used for the major and the minor structure shift. Now let's go back. Let's look at the daily. Now the daily time frame, you can see that this market is what? Bullish. I won't be talking about entry here, so don't look at it and say, well, you miss an entry here, you miss an entry there. No, I want to show you what will help you in life. So the last I that was taken is this I here. Okay, this is the I that was taken. Or if you want to use the minor structure, this I is the last I that was taken. I created a I here. This becomes the last I. So as this becomes the last I that was taken, where is our original structure leg? You trace back the low that produced it. Now this OSR is within the internal structure. This market major structure is this low. This is the major structure I. But all of these are internal structure. And we have what? We have OSR within the lower structure. Now this signifies the moment this internal structure shifts, I will be looking for what? Bearish trades, because it signifies that this trend, this bullish trend, will be over, right? So what I would do is simply at the extreme of these are where you start looking for your trade, especially this opening price, the reversal opening price. Now, when market breaks this low here, this low is a chalk. This low alone does not confirm a break of market structure. Okay? Why? Number one, this is the internal structure, and number two, the external is still there, so you can still be buying in here. Now, when market breaks this level, and I know the external is intact, there's a way you take these trades, okay? But there's nothing wrong within the internal structure for you to start looking for trades, especially is a scalping opportunity or intraday here. Why? We have a bearish break here, and all of these serve as what? Inducement. We have this I as inducement. We have this as inducement. So the extreme level here, you can take what? A short intra. Why am I not confident in this? Because it's the internal structure. By the time this external structure range goes, because this is the last I it produced, for the external structure ORS, this is the level. External structure ORS, we have this level here that needs to be taken. Okay? That's the level that needs to be taken. So now let's look at it. With this, I can anticipate that we can start looking for what? Bearish trade. Also, I can use that as well to determine this move internal structure range, because we have an internal structure range there. This low produces I. This is the last I that was taken. So where is the low that produced it? This is the low. So once this low gives way, we can start selling. Now you can see. Now why I'm putting out all this is the reversal point. This is where the market started reversing. So in this case, it will appear as though chalk is working, but I will show you where chalk will not work. So now we have a break here. This is chalk, right? Price came back down, broke this internal structure leg. Now this is a sign of what? A reversal. You can see market came back down, broke that level. What happened? This extreme becomes our way of looking for what? Trades. And all of these are inducement. This level is an inducement. This I here, because of the extreme price point of interest seated just after the OSR was taken. So it makes sense to start looking for trades in here. So these trades, these are internal, right? Remember, the external has not given way. So we can still find a way, take this trade to this point, and then try to continue moving bullish. Trade management. If you don't understand it, you have to find a way to understand it. This low is the OSR external, okay? And you can see eventually it goes broken. The moment this level goes broken, we have an inducement. This is the external point of interest where you can start selling from. You can see how the market respects those levels, not chalk, right? Like for example now, for those looking for external mitigation, you can see this level now. This is an external, and it makes sense to buy here. A chalk, market came back down, gave you a reaction, but eventually takes you out. Why did it take you out? Because we have gotten a shift here, okay, OSR shift, which signifies a higher structure that market is bearish. And eventually that move led to the break of this. And as a result of this break, I'll be loading more for a short. Market creating a chalk. For some people, it has tapped into an external structure here, creating a chalk. They will be looking for ways to buy in here, fair value gaps, other blocks, and so on, supply and demand zones. But what happened? Price gave a reaction and then break below, thereby creating what again? Lower structure. This level is where you start selling from because the market has confirmed bearishness. Now, with this internal structure here, you can take this pullback, which I will show you. I won't show you in this video. You can take that pullback. There are key levels and time frame shift that you need to incorporate in order to have a high probability pullback trades. Okay, so you can see currently price here. You watch as price move, right? So you can see now a high. This is a structural range taken, and then market went low. So this, in this case here, your structural range is very, very important. You can see as market went low, it's very straight. Why? Because as we are moving here, this is the last high that was taken here. This is the low that produced it. This is the low that produced it. Market closed below that low. You can start selling from here. This is an inducement. Sell from here. And then you see as the market move. In this case, you have a higher probability trade setup when that occurs. And this is not a double break of structure, as I said. Double break of structure will just give a double break after chalk, another break. It's not enough. You must monitor this level. So as you can see, price went tanking down. The same thing applies if you look at it from maybe indices. You can apply it in all time frame. How do you identify the structure high here? The OSR range. This is the level you want price to trade to close below. Immediately this happens, I'll be careful of this buy. Fine, the market is bullish, okay, but this is a question that we might be going bearish for the meantime. So it makes sense to look for trade here. All right, it makes sense to look for trade in here unless this level goes. If it goes, then the bullish market is intact. Now let's look at the 1 hour. Using this to trade your 1 hour. How do you know when price wants to go bullish? Now, a chalk happens here. This is the internal original structural leg. Yeah, market breaks that level, then your bullish market is intact. Okay, your bullish market is intact because that was the low, the high that produced this low that was broken. Okay, you put a mouse, maybe a line on top of that. Maybe you see this break. It tells you that this point of interest will hold and price will be willing to go up to the upside. And that's what we have in here. Price came back down, taking out inducement here. Tapping here. It could be complex. You can use this as a way of multi-time frame analysis in order to catch the move. Obviously, you get some trades wrong, you get some trades right. But overall, we are looking at long-term profitability. This will give you that. Why, when you focus more on chalk as your reversal indicator, you end up getting losses. Put in the comment if that has happened to you. You see a mitigation, a chalk, and all of a sudden price did not respect it. The only time price will respect chalk is if the market is pro-trend already. The market is bullish and then you have a retracement and then a chalk. It makes sense to start looking for buy. From there it will work. But if you are looking for a reversal, most times chalk will not work. So if you want me to make more video like this, make sure you put in the comment section. And also, the discount is still up for the VIP members. If you combine OSR with the opening price strategy, it's a game changer. All right, so do not miss that promo right now. It's still on for the VIP, and then for the SMC class is over. Maybe if there's more demand for it, I might open it up again, but for now it's closed. But if you are interested in it, just let me know. If I have enough people who are interested in it, I may consider reopening it, because I want to give back to the community. I've learned so much from the market and I want to give it back. So that's why I'm giving out this content for free. You won't see this anywhere. All right, so make this video hit 1,100 likes and I will make another video to explain more on how to take entries with this. And also, if you are new to this channel, make sure you subscribe, like, share this video to other traders so that YouTube know that we are cooking something beautiful in here. On that note, I will see you in this video.